So, the Wall Street Journal recently released an article titled, "Want to invest in a private company? All it takes is $5,000. So, I think this is actually a really fascinating topic, and I'd like to dissect this article and what its implications are for the future of investing. So, I think for a lot of people, the thought of investing in groundbreaking private companies like SpaceX or Figure AI has always felt out of reach. However, pretty soon, that dream might be a reality. Currently, the private investment landscape is undergoing a major shift, allowing for more and more everyday investors to buy shares in companies that were once reserved for Silicon Valley elites and institutional giants. So today, we're diving into how new platforms like EquityZen and Forge Global are changing the game and what this means for the future of investing. You see, historically, investing in private companies was always an exclusive club. You either had to be some venture capitalist, a hedge fund, or a billionaire with the right connections. And the barrier to entry was incredibly high, often requiring millions of dollars in capital or insider access to get in before a company went public. This meant that by the time a company like SpaceX or OpenAI hit the stock market, most of the exponential growth had already been captured by those early investors. The good news is though, this is changing. New platforms like EquityZen and Forge Global are opening the doors for accredited investors to buy shares in private companies with as little as $5,000. So how does this actually work? Well, early employees, founders, and venture capitalists who own stock in private companies sometimes want to cash out before the company goes public. Maybe they've been holding onto their shares for years, or they need liquidity for another investment. So instead of waiting for the IPO, they can sell their shares on secondary markets, meaning that investors like you can now buy those shares, essentially getting in before the company debuts on the stock exchange. Imagine being able to own a piece of SpaceX, Elon's revolutionary aerospace company, or even Figure AI, which is an exciting new company that's pushing the bounds of artificial intelligence and robotics. These companies are shaping the future, and thanks to these secondary markets, you could have the chance to invest in private companies before they go public. This gives investors exposure to high-growth companies that might not IPO for years, if they ever do. In fact, some companies like SpaceX might remain private indefinitely, making these platforms one of the only ways to get in on the action. But let's be real, there definitely are some risks here. Unlike public stocks, private shares are much less liquid, meaning if you want to actually sell your shares, there might not be a buyer right away. You also won't have the same level of transparency as you would with publicly traded companies. Private firms aren't required to release quarterly earnings reports or SEC filings, so your access to financial data is limited. And of course, not every private company makes it to IPO. Some might struggle, get acquired, or even fail, leaving investors with little or no return. So to help mitigate these risks, platforms like EquityZen and Forge Global are working with Yahoo Finance to provide more data and insights into these pre-IPO companies. Yahoo is now sharing information on over 100 private companies, giving investors a better understanding of what they're buying into. And this is a big deal, because until now, private investing often felt like a black box, filled with uncertainty and insider-only information. So this means that more transparency could mean even smarter investing decisions. Big picture though, this is part of a larger trend towards democratizing investing. Just like commission-free trading started by Robinhood made stock investing more accessible, these platforms are making private equity investing available to more people. This could fundamentally change how wealth is built. Instead of only the ultra-rich having access to high-growth startups, more investors now have the opportunity to buy in early. And I think this could shift the balance of financial power over time, creating more opportunities for generational wealth outside of the traditional stock markets. However, there is one catch though. In order to invest, you of course need a minimum of $5,000, but you also need to earn at least $200,000 per year, or $300,000 if you're married, for the past 2 years, with a responsible expectation of maintaining that income level. However, if you're not making that kind of yearly income, there is another way. They will also accept you if you have a net worth of at least $1 million liquid, meaning this excludes the value of your house, if you own one. So honestly, this is a massive opportunity, but it's not for everyone. Investing in private companies comes with unique risks, and while the potential for big gains exists, so does the chance of losing your investment. So if you're considering jumping in, make sure you do your research, understand the risks, blah blah blah. But one thing is clear, the world of investing is changing, and for those who understand these new opportunities, I think the future is looking really exciting. And if you want to stay up to date with all my other investment videos, be sure to watch this one next. Thanks for watching, and I'll catch you next time.